reserve ratio from 22.5% to 27.5% is still the big story that the market is waking up to today. But let's just give you a bit of a sense of a reminder of how it all came down on Friday. This was a report we filed in. Let's give you just a reminder and then give you a heads up, as you may have heard earlier, about what the market analysts are saying this morning, which everyone has been looking forward to the morning after. A quick one on the report.
It's the first meeting of the Monetary Policy Committee for the year 2020.
Distinguished ladies and gentlemen,
Expectedly, members of the committee are on hand to brief journalists on outcome of the meeting. First, the central bank governor gives an overview of how the international market has fared and its impacts on the nation's economy.
Although global output is projected to expand moderately in 2020, compared with the previous year, the overall medium-term outlook for the global economy remains uncertain due to the persistence of several headwinds. These include the lingering trade tensions between the U.S. and its major trading partners, rising levels of both corporate and public debt, likelihood of continued geopolitical tensions in the Middle East, fragile recovery of the manufacturing activities, and a narrowing policy space by which central banks in the advanced economies can respond to future macroeconomic shocks. In addition, predicted weather-related disasters could pose further threats to global output recovery.
Next, the governor of the Apex Bank reels out the considerations of the committee. These include an increase in credit flow to the private sector, which has impacted some sectors of the economy. But there are concerns in the areas of insecurity, debt level, and the need to reduce dependence on monthly allocations.
The committee identified infrastructure deficit and the long-standing clashes between herdsmen and farmers, which are constraining domestic production and contributing substantially to a rise in food inflation. MPC therefore urged the federal government to relentlessly seek innovative ways of addressing security challenges across the country in order to boost aggregate food supply.
And thereafter, he states the decision of the committee, which includes the retention of monetary policy rate at 13.5%, an increase in the cash reserve ratio from 22.5% to 27%.
So what's been the reactions from the investment community? Chapel Hill Denham has drilled down on these monetary policy decisions on raising the cash reserve ratio. What's the story this morning? Chapel Hill says it was a rabbit out of the hat against the consensus status quo consideration that the policy will remain unchanged, and a strong hawkish tilt, which was voting 9-11 in favor of raising that to 27.5% for the first time since March 2016. The MPC, according to what we heard on Friday, cited what you called upside risks to inflation, which was 11.98% in December last year, as a primary consideration, and also noting the build-up in financial system liquidity, which finished off close to 500 billion on Friday. Supply-side structural factors was a problem. So the decision was a tacit admission that the liquidity impact of the dovish balance sheet policy of the central bank that started in second half of last year is a major risk to external sector stability. That was what Chapel Hill Denham economic report said. So what's the initial estimate of the impact of what happened on Friday? That raises the effective CRR on banks from 29.3% in October last year to 34.3% as we speak. Additional 831 billion naira of banks' liquidity is now taken out of the system. The rally at the debt market or the fixed income market will likely ground to a halt when market opens today. That was the forecast from Chapel Hill Denham. We'll check out later on the show whether that is happening as we speak. Meantime, the aversion will likely persist in terms of fixed income until the 13th of February, when the debt office released liquidity of what you call the bound maturity. What's the impact on banks according to Chapel Hill? Says as far as the coverage banks are concerned, the cost of funds will decline by nearly 20 basis points on average for the full year 2020 estimate. The previous estimate was 30 basis points year on year. The coverage average NIM estimate down 10 basis points. Full year 2020 estimate profit after tax forecast for coverage banks will be lower by 2.7% on average, implying a 7% year-on-year growth against the previous growth forecast of 10% year-on-year for the new year. Bank's rating unchanged at Chapel Hill, with top picks for the bank as Access, GT Bank, and Zenith. Of course, then we have the Nova Merchant Bank reports also giving the same figure of 831 billion naira for the impact that we saw on Friday. All that is coming in. Nova says they weighed the rationale by the MPC for the CRR increase, and that will help achieve two goals, according to Nova, to help the central bank to reduce cost of liquidity and combat possible currency speculation. All of that we're discussing today and throughout the week, but let's check into the market for you. This is how we finished off on Friday. The stock market, 0.03% on the broad index. We did 15.26. That's where the stock market market cap finished off. On the next page, you find the primary data, volume, value, and deals. Then in the banking sector, that was down 2.57 just before we had the MPC on Friday. Consumer goods lost 3.5, but industrial goods was very strong, 5.10%. Insurance did 3.05, and oil and gas 2.54%. Beg your pardon. If you go to the next page, you find where Seplat drove the market to the upside. Oh, that was a negative 2.8% by Owando, but Seplat actually went up on Friday. That's a new high for the stock. 605 in the new year, up by nearly 1%. Where are we? Okay, let's check with the NESD over the counter. Those guys also gained about 0.5%, 706.52 on the NSI reading, and the market cap went up slightly to 507.5 billion naira. The next page shows you the primary market indicators, 6.54 million. Not such a big story, but again, for 5 transactions, less than 500,000 on listed securities that were traded. Okay, take me through the fixed income market. We'll talk about that a bit later on the program. That's your open market operations. Everyone's talking about those guys. A very big jump on Friday, 218.4 billion naira. We'll leave that to analysts to talk about in a while. Juliana Olayinka is joining us from our London studio to take us through the latest conversation around Brexit and all of that. So, Juliana, good morning. Welcome to the program.
Good morning, Bosun.
Great. What is this new global travel visa? What does it all have to do with the post-Brexit that we are now counting down to the final days? Today is the 27th. We have a few days to go.
Well, Prime Minister Boris Johnson is keen to show the world that he wants the UK to be home to the most brilliant minds in the world. So this global talent visa is a new visa. Well, it's pretty new. It replaces the old one we had, which was a talented visa. The difference between that one is it was capped at 2,000 people. This new visa will have no cap. It will come into fruition on the 20th of February. And basically, if you're an expert in maths, science or technology, Britain wants you. This is also coinciding with £600 million that Britain is trying to invest in these industries just to make it better for tomorrow. Of course, at the moment, immigration is one of the key sticking points post-Brexit. Last week, a lot of the business leaders and the biggest business groups in the world were urging Boris Johnson to be careful, not to pander to the right or to the hardline Brexiteers when it comes to getting people into the UK. And Boris Johnson has said he will be following an Australian-style point system. So if you do want to come to the UK, it pretty much will be based on what you can bring to the economy. And this new global talent visa is part of that.
Great. Okay, so We're now counting down, and part of the countdown has to do with the Bank of England interest rate decision on Thursday this week. This will be the final MPC meeting before Brexit on the 31st. How crucial is this week's decision? Will it be a hold? Will it be, what will it be? Do we have any idea?
Well, it's going to be absolutely crucial. This is a massive week for Britain. As you said, Bank of England Monetary Policy Committee meet on Thursday, just before Brexit Day. And, you know, this time last month, everybody was saying that it was almost guaranteed, or at least 70% chance that the interest rate will cut from 0.75 to about 0.5. But, you know, the Boris bounce has actually kicked in after that historic election victory that he received last month. The economy seems to be really picking up. We had good labour market data which came in last week showing that the last quarter of 2019 the UK added over 200,000 jobs to the labour market. Unemployment rates are at record low. That PMI flash data we received last week did show that the economy does seem to be reviving. So it would be pretty difficult for the MPC to try and justify whether or not that they will be cutting these interest rates. There are a couple of things that could be happening this week that perhaps may change their mind, even though the legislation for Brexit on the 31st went through Parliament quite quickly. It still does have to go through the European Parliament on Wednesday. Of course, that is likely to take place, but the sound bites from that could sway the Bank of England. And then, of course, as well, we do have that huge Huawei decision, which again could sway. But the word on the street is that it is likely to remain unchanged. But even if it does remain unchanged, there are still lots of discussions about the handover of the governor and also the UK economy and the pound during the transition period, which at the moment is 11 months.
Interesting. Are you just touching on the Huawei story and the 5G issue? It looks like Washington is interested in this relationship between Huawei and the UK authorities. So the US Secretary of State, Mr. Pompeo, is heading to London this week. And ahead of that, he's sending out some tweets trying to convince the folks at number 10 Downing Street, the MI5 and the rest, about this relationship with this company. So where do we all go from here? Does it look like the U.S. will have its way as far at the end of it all when Mr. Pompeo arrives in London this week?
Well, this is going to be a crucial decision for Prime Minister Boris Johnson so early on in his prime ministerial tenure. You know, depending on who you talk to, most sources say that, you know, it's already a done deal that the UK will allow Huawei to build part of its 5G infrastructure. Huawei and Britain have had a relationship for about 14 years. They helped build some of their 3G infrastructure, their 4G infrastructure, even before Boris Johnson became Prime Minister. Theresa May had already had these long, lengthy discussions with the Security Council, with members of her cabinet. Even though, of course, the concerns were taken on board, it seemed as if the consensus from the government were that they would be cautious, but there's no possible way they can build a 5G without China, that they need them. But considering the entire trade spat that's been taking place between China and the US, and the fact that Donald Trump is insisting that the UK must not sign this deal, it does add on the pressure, as well as UK being the US's strongest ally. Britain are also part of this data intelligence sharing group with the US, with Australia, with Canada and New Zealand. And Australia have already said that they won't be allowing Huawei to come into its network. So it definitely is a tough decision. Yes, we've got the Secretary of State, Mike Pompeo, coming into the UK on Thursday, and he has been tweeting, he has been saying that, look, you know, we understand that it's a tough decision, but, you know, the sovereignty of the UK is at stake if it goes Huawei. But Boris Johnson, on the other hand, doesn't want to be seen as being too weak and too quick to side with Donald Trump, especially as the US are already threatening a trade tariff war with the UK. So it's a pretty difficult decision. And there are some analysts that believe that this Huawei decision could even overshadow Brexit on Friday. So it's a big week in the UK for business, finance and politics, just as we're looking to depart from our biggest trading partner on Friday.
I was just about to ask, how is the UK media playing the Brexit, the final week into the final countdown into the Brexit, the number of days? How is it all playing out in the local media? How did it all play out over the weekend and this morning in London?
Well, it's been a little bit subdued, not as bold as it has been. There's so many news stories going on at the moment. Obviously, the death of Kobe Bryant, Brexit. We've got Meghan Markle's father speaking on national TV in Britain at the moment. So it has been a little bit quiet, but it will certainly pick up. There was a huge row about whether on Brexit Day on Friday, Big Ben, which is going under construction at the moment, should come out of construction and bong at the tune of £30 million. That's how much it would have costed. That's scrapped at the moment. There will be a commemorative coin, a 50p coin, which again is costing the taxpayer millions of pounds. So at the moment, there's lots of arguing and toing and throwing of just exactly how Britain will be commemorating this historic moment. But what we do know so far is that the Prime Minister will be giving an address outside 10 Downing Street. Nigel Farage, the leader of the Brexit Party, the man who many believe started this whole process in the first place, he will be speaking with people on College Green, which is that patch of green grass just outside of Parliament. So there will be a number of things going on. But, you know, this is just when the business gets started. We've got 11 months to transition, to try and sort out our summer holidays this year, our visas. So it's a huge, huge deal. But I think there'll be a huge sigh of relief once Friday evening is out of the way.
Yes, it's going to be a very cold evening on Friday, listening to the Prime Minister on the 10 Downing Street or Nigel Farage at that very small green patch where the media, international media, local media usually get themselves all packed in by the side of the Parliament building with that streets just beside the Parliament. And everyone will be there. I'm sure that park will be fully packed on Friday, everyone with their cameras listening to what Nigel Farage has to say as the final hour arrives for UK to depart from the European Union, formally speaking.
Absolutely, it will be jam-packed. It's a very historic moment. Boris Johnson as well, let's not forget, he is the leader of the strongest Conservative Party, or the strongest government that we've seen in this country for over 30 years. You know, it went through quite quickly, quite quietly last week. There was some legislation that the Labour Party and the opposition party tried to amend with this Brexit bill. It didn't reach the light of day. There was no media coverage about it. So even though it is going quite smoothly, there are some silent concerns. You know, every major government, especially in the West, needs a strong opposition. And at the moment, there is no strong opposition here in the UK. The Labour Party do have their contest going on at the moment. We won't know who the leader is until April. Jeremy Corbyn, the outgoing leader, doesn't appear to be, gaining as much momentum as he has in previous times. So there are some concerns. There are concerns about immigration. There are concerns about the economy. There are concerns about sterling. You know, a lot of people are saying that there will be an immediate shock. So on Monday morning, when we have this discussion on your programme, Bosun, it'll be interesting to see just how well or how badly the pound is performing. Even the PMI data that we had last week is only a flash PMI. That's not the accurate data. So there's still a very, very long way to go. But at the moment, it doesn't appear to be that there's anybody in the UK that can stand up to Boris Johnson and his ultra-right, some people may say is an ultra-right hard Brexit exit from the European Union.
I know. Friday will be interesting. Dinner time with you in London. Juliana, I'm sure you'll be on our news network. Then on Monday morning next week, it's going to be breakfast between the both of us across the Atlantic. Thank you so much. Have a great day, Juliana, and see you at 1:30 with Chimezie Obiwago. Let's take a break, everyone. How is the market trading, the fixed income, and the new CRR? Is the market on a sell-off? 2 minutes.